Hello, sir. Welcome to the show. A very good morning to you.
Yeah, very good morning to you as well. Thank you.
Now, sir, I mean, the overall direction of the market has been fairly positive. We have rallied by about 1,000 points or so from that October 26 low of around 18,837 or so. But before today's session, before today's rise, we were pretty much consolidating where we were seeing the market was losing some sort of momentum. Nifty was moving sideways, Bank Nifty was struggling, small cap index was struggling at higher levels, and it ended near the day's low yesterday. So, what's your view on the overall markets? Is it time for us to be cautious?
I would say a couple of things that we should definitely bear in mind. One is that if you look at Nifty vis-a-vis Bank Nifty, post the RBI that notification came in for the NBFC's risk weightage enhancement, we've seen some significant, I would say, correction in banking stocks, NBFC stocks, and Bank Nifty hasn't been performing as well compared to Nifty. So that's one dampener, which otherwise Nifty would have, if you go back in time. So Nifty had made a high of 19,849.50 in October. So we are very close to that high today. So that would have been taken out quite some time back. One. Secondly, if you look at global cues and also the US inflation, because ultimately the trigger was the US inflation data, and going forward, how the US Fed is actually going to look at the interest rate. So,
Right.
so they've been so that's one positive which has really triggered the markets. Then crude oil prices also, as you rightly said, crude oil prices have been on a cooling spree. After a significant rally, we've seen them corrected, and also they are trading in a consolidation zone, which is within the comfort zone of most of the, I would say, countries. Thirdly, I would say what we are also witnessing is that it's a broad-based rally. As you rightly said, the mid-cap is trading at record highs. We've seen significant up move in the small cap as well. So it's not only and the large caps. Some of the large caps haven't really been doing much for the last few months. But overall, it has been a broad-based rally. That's one thing. Also, if you look at the some of the indicators like the advanced decline indicator, that's a very good indicator of the overall breadth of the market. That has been positive. That has been
Right.
significantly positive. Also, if you look at another indicator, which is the all-time highs, how many stocks are hitting all-time highs? So if you look at the trend of that, that also has been positive. So that really, and another important point is if you look at the India VIX. So
Right.
India VIX is also within very comfortable levels. So that these all data tell me, and also what we are seeing is that global cues and global markets. There also we are seeing overall in some countries there would be, I would say, mixed trends, but overall if you look at the US per se, the trend remains positive. So that's been helping the markets. So these are a cumulative, I would say, cumulative factors which are helping the markets. And also if you look at the market from a technical perspective or a derivative perspective, we see that derivatives the last couple of days we've seen long build-up happening in Nifty, so that's one positive sign. And also, if you look at the trend, we are seeing that clearly Nifty has a major zone of resistance around the 19,850, 19,900 zone. Once that is taken out, then we are definitely headed for new highs. So one needs to bear that in mind, and also there's not much to be on the worry front, because the first indication would come from India VIX, which is within reasonable limits. The moment it starts going above 15, 16, then there could be some cause of worry. And if it sustains above that level, that's the second thing. Because
Right.
generally what happens, you'll find that there's a dip and then the market bounces back. So that's a sign of a market which is in for consolidation, but with a positive bias. So
All
these
right.
are few cues which are impacting the markets, right?
So as you rightly mentioned, the rally began obviously when the inflation print in the US came lower than expected, and of course, Fed decided to maintain the policy rates for the policy meeting on November. But the minutes came out yesterday, and while rate hikes maybe not on the cards, it seems like Fed is not, very going for it's not going to go for a rate cut anytime soon. But, the market has been pretty much expecting a rate cut of somewhere around 75 basis points to about 100 basis points by mid 2024. And on the back of that, we have seen tremendous rally. I mean, US markets are up almost 10%. We are up almost 5% or so. But do you think that, this narrative coming out from US Fed that, rate cuts are not likely anytime soon, will that hurt the sentiment, sir?
I would say, see, markets have factored in because markets have also understood what the US Fed does and what it says. So there's a lot of understanding for the smart market participants, and also the US. If you look at the US Fed rate, US inflation rate, which the US Fed is targeting, that's sub 2%. So still from the current levels, which is I would say above 3%. So that clearly tells me that Fed doesn't want to go all out and say that no, we've seen a significant decline in interest rates, in inflation rates. So they don't want to get into that mode because that would lead to more maybe liquidity or maybe more volatility in the market. So they want to, because central banks, they have the dual role of maintaining interest rates and also clamping down on the inflation, because that has a very important role. So I think, having said that, markets are anticipating that if the US inflation continues to be on the downward trajectory, that's the key point. If it continues to be in a downward trajectory, then sooner or later rate cuts would happen. So that's what the markets are factoring in, until unless we have some unexpected development in the market which could spike energy prices, because crude oil definitely plays a very important role in inflation. So till the time we don't see that happening, I would say I wouldn't read much into that, because that's more of a statement for investors that don't take things lightly.
All right. Sir, coming back to our own markets, three sectors, I mean, Nifty Bank clearly has been an underperformer, but three sectors in this November series have, been providing strength to both the markets in general and Nifty as well, being the IT pack, the pharma pack, and the auto pack. The pharma and the auto indices, by the way, are at their record highs, and all three indices have rallied somewhere around 7 to 10% in November alone. What, between the three, which index could perhaps take that leadership role and, provide that further impetus for the markets to move to record highs?
The three sectors which you mentioned, one was IT, the other was pharma, and the third was?
Auto.
Yeah. So if we look at these sectors in particular, what I see is that the auto sector is also trading at record highs. So that and that long-term trend remains extremely strong. There's no doubt about it. So and if you look at the gains which the auto sector has had for this year till date, I would say that's roughly around 35% or so. Now coming to the pharma pack, pharma is also trading at record highs. So these two sectors are trading at record highs, and also what we are witnessing in these sectoral indices is that the trend remains extremely strong on the long-term charts. Now coming to the third, the IT has bounced back, but it's nowhere near its all-time highs if we go back in time. So we see that in December of, in the last quarter of 2021, it had made a close to 39,000 levels or so, 39,400, 500 in first quarter of 2022. So, and it's currently around 32,600 odd levels. So it's still a far cry from its all-time high. So, but yes, the way IT has bounced back, that definitely is a positive thing. Majorly, we'll have to see Infosys, TCS, how these stocks perform. They've also bounced back. But amongst the sectors, pharma definitely looks good. Some of the pharma stocks could do extremely well given the structure of the markets. Even auto, it's going to be more stock specific. But yeah, these two sectors are definitely trading very strong and firm.
All right, that's the view from Mr. Aamar Singh. Sir, appreciate your thoughts. Appreciate you joining us here on First Take. Thank you, sir.
Thank you.